passed it. You bring the 9 biggest banks to Washington, don't tell them what the meeting's about, and you've completely changed strategy. So when did you know you would not be, did you know before Congress voted on it, or did you know after Congress voted on it, when you would not be able to go in and purchase these securities and do what you told us you were going to do?
Well, we knew after. One of the problems was that the...
But here's what I want to understand. This was a month-long deal, because I remember the first conference call we listened into as members of Congress was in September. You had a whole month, and yet within 10 days... the strategy, probably within a few days, the strategy. So you had a whole month leading up to this, convincing the Congress you could do this. And yet within 10 days, complete change. And yet you're bringing 9 banks to Washington, not telling them what it's about, not telling them you're going to force them to sign a form, take taxpayer money, completely change strategy. And you look at, as we went through some of the things here, the pattern of, some might say deception, where the banks come to Washington not knowing what the meeting's about. Mr. Angula does the letter saying we're going to steer Merrill Lynch on how they disclose to the public what's going on in this merger, what's happening with Merrill Lynch. I think it's a reasonable question to say, when did you know this? And if you didn't know until after October 3rd, what took you so long to figure it out? You had a month as we were going through this whole thing, and frankly, 2 weeks of debate in this Congress. You remember they sent us home for a few days, come back and we passed it, or it was up for a second vote.
I'd be happy to answer that question. The drawback of the asset purchase plan, as we discovered, was that it took some time, probably some months, to put into operation. We thought perhaps that would be possible, but unfortunately the banking situation deteriorated very quickly, and by Columbus Day we had a global banking crisis. And the only way to stop the crisis from spreading and creating a huge problem was to inject capital, to have guarantees, and to take the various steps we took. So this was the only way to do it as quickly as was needed, given the way the situation changed. So what changed was the financial situation between October 3rd and October 14th. And we had no way to do the other approach because it would just take too long.
Mr. Chairman, I just got a few seconds. I'm going to completely change gears here. Tell me, and if you can go after this, and I appreciate it, the money supply. I mean, I didn't get a chance to ask you questions when you were in front of the Budget Committee, and I apologize. A lot of people, a lot of sharp people are very nervous about where we are with the amount of money out there in the system right now. Talk to me briefly, if you can, about your concerns there and how we're going to deal with what I think a lot of people believe is going to be real inflationary concerns in the not-too-distant future.
The money's not in the system in any real way. The money is electronic deposits from banks sitting in the Federal Reserve accounts. They're not being used, not being loaned, they're not circulating. The key issue here is, can we unwind this money creation and low interest rates in time to head off inflation when the economy begins to recover? We have all the tools we need to do that. We believe we can do that. We will certainly remove that stimulus in time, and we are committed to price stability, and we will make sure that it happens.
Thank you, gentlemen. I yield to the gentleman from Ohio.
For unanimous consent, I